Hey folks, it is April in Dallas, and that means your host, Clayton Collins, is suffering through some pretty tough seasonal allergies. But I made it work, and I got a great episode in today with Gil Arbitsman, the Chief Financial Officer at UMortgage. For those of you that aren't familiar with UMortgage, this is Anthony Casa's new mortgage origination shop. And if you aren't familiar with Anthony, I'm surprised because the man is not afraid to be in the headlines. Anthony has made a lot of noise in his efforts of building AIM and now launching UMortgage and recruiting and acquiring some top talent into his organization. This conversation with Gil takes a look at a lot of the operational considerations from building a business and biz dev and marketing that you usually wouldn't have with the chief financial officer. But we get to have this conversation through the lens of the CFO, talk about the finance considerations of growing, acquiring, and recruiting in a tough market, and really get a glimpse into a top-notch finance leader who has a true lens and a true focus on growth. And I'm giving Gil a lot of compliments here, but I really did enjoy the conversation and think he's an incredibly smart finance leader. I hope you enjoy this conversation with Gil Arbitsman.
Hi, this is Sarah Wheeler, Editor-in-Chief of HW Media, and I'm talking to Ed Messman, CEO at Rook Capital, about their shared value investment program. Ed, how is Rook Capital creating new homeowners?
Yeah, the shared value investment that we created helps prospective new homebuyers by adding up to 25% to their down payment in exchange for an equity position in the house. By doing that, you effectively lower the monthly cost of homeownership to a level that's affordable and within their budget.
Thanks, Ed. And listeners can find out more at rook.capital.
I think that perspective is spot on across all industries, especially industries that operate with some cyclical components. And these negative cycles, these recessions, the big get bigger because the small get squeezed. They don't have the resources to muscle through. They don't have the capital access or leadership capabilities to do deals and muscle through margin compression or losses. It is fascinating. You go back in history and kind of look at how in a lot of sectors, the big just get bigger as they go through recessions. And, it has some really positive aspects, but it also is challenging in the industry. Wholesale lending is one of those. Like the mantra of wholesale has been optionality and having lots of lenders to go to for different product sets. And optionality definitely still exists in this market, but it's not necessarily a positive thing to see like some of like the number 4, 5, 6, like the non top 3 players get like squeezed out of the market. I'm sure that's got to be painful for a lot of their clients who looked to them for optionality.
Right. And another example there is outside of mortgage, is just in the banking space. We saw what happened recently with some of those regional banks. And guess who the winner is? The big guys. Right?
Hey,
Chase
you can't have too big to fail institutions, Gil. Right. Let's merge some of like the smaller players into the big ones and make them bigger.
It's just not good for it's not good for the consumer. That's the problem here is when there's only 3 banks out there, you're not going to have free checking accounts. You're not going to have free debit cards. And the same can be said in mortgage. So I think we're going to see some consolidation, but I hope for the consumer's sake and for homeowners' sake, there's still enough competition out there to keep financing affordable.
That's been one of the most confusing parts for me about like some of the Federal Reserve strategies. I know the Federal Reserve understands and does not want to create too big to fail institutions or support the further growth of too big to fail institutions. But the rhetoric also seemed pretty callous to the idea that like, hey, some small mid-market specialty banks are going to fail, like in the SVB scenario. It is exactly the monetary policy that creates more concentration of capital.
Yeah, I agree completely. I don't know. I think a lot of this is sort of like a mess that they created. But then again, we went through sort of an unprecedented global pandemic that, I sort of, they did the best they can and now they're trying to clean it up. But I think in the end, it's just going to benefit the big guys and hurt the consumer. So I hope that whatever they devise, keeps consumers' best interests in mind.
So let's talk about like kind of the digitalization and technology innovation across housing. And I'm interested kind of from the perspective of investments you're making at UMortgage. But overall, like, we're operating in a tough market right now. Like I said earlier, kind of higher than desired interest rates, super low inventory. But the houses that do list are moving faster. And we've Mike Simonson, who's our president of our Altus division, he shared yesterday in a webinar that of all of the homes that went on market last week, over 25% have already been absorbed by Monday of this week. So we're talking about this like inventory crisis, but the reality is the market's just moving fast. Like, people are still out there bidding, people are discovering homes faster on Zillow and Realtor.com and other digital platforms, which puts pressure on mortgage lenders to move quickly and be able to pre-qual and close loans on time. How is UMortgage thinking about technology strategy and empowering originators with digital tools to move at the speed of modern real estate?
Yeah, so our tech stack is completely accessible on any device. And that's helped our LOs, from a speed standpoint, getting the information in front of their borrowers immediately in a format that's easy to interpret and understand, easy to interact with their consumer. We're all about relationship focus here. So, technological developments are going to speed up a lot of things in the mortgage industry, particularly on the refi side. I think nothing can replace the relationships you have in your local community. And that's a focus at UMortgage. And I think the technology is going to help and it's going to speed things up. But it's not going to replace that in-person relationship piece of the business.
Yeah, it should enable more in-person interaction. So is that like, so when you're building a tech stack that is fully mobile, like moving across mobile device to tablet to laptop computer and like not being tied to a desktop, does that kind of flow into cultural expectations for originators? Like, hey, you're not tied to your 2-monitor rig here. Like, get out, be in the field. Like, is that flow through, or is that kind of look different across the originator base?
Yes. I mean, here's a perfect example. We're recording this podcast. I'm sitting in Salt Lake City, Utah. We're here for the grand opening of one of our great branches out here. And it's not just Anthony and I here. We had a lot of our top producers fly in to support Jimmy Hobson, Kyle Kohler, and Adam West on their grand opening. We had about 350 people here yesterday. There was a bounce house, a face painter. It was a fantastic event. All about community, all about relationships. But the best part about it was I got to observe a lot of our top producers from Ohio and Georgia, working, supporting their customers from here in Utah. I mean, you can't do that without a tech stack that allows full access from any device anywhere in the country. And, it allows them to get out from behind that keyboard, build relationships, foster that peer-to-peer network, see best practices in other markets while still, supporting ther pipeline. That's
really interesting. So the deal that you're announcing in Q2, were they out there at this grand opening as well?
No comment.
Can't get you there. I got to think of a better framing to trip you into that one, Gil. So Gil, I've kind of one last question, kind of on. So this branch just opened in Salt Lake City, and Hobson, like, this is another former like broker shop that has joined UMortgage, right?
They've been here but they're growing so fast. This is actually a grand opening of their new office. It's a fantastic office. The goal here is to create a space for the community, to educate homeowners, to educate realtors. And they have a space after so many years of just sitting in your home office. It's a space for people to come together, to learn about other areas of the business, to educate consumers, and really just bring the community together. And we think this is a model that other originators at UMortgage can replicate in their local communities. And 350 people don't show up to an event because there's a food truck, right? They show up because they respect and support what these guys have built here in Salt Lake City. And I think that speaks volumes about their character, but also about the UMortgage model. They were very successful prior to coming to UMortgage, but coming to UMortgage allowed them to sort of rid themselves of, sort of the administrative aspects of running a brokerage and let corporate support you while you go out and continue to build your business.
Yeah. I know there's been, you're recruiting a lot. So people talk about UMortgage, and there's been critique that I saw a bunch of brokers joining a mini core when there's also an opportunity to recruit from the retail channel. Cause I know that was a line of talk that was really, really important. Are you seeing a kind of a cultural difference between the folks that fit well at UMortgage, like people that were formerly brokers and had that independent mindset fit in really well, and people that came out of a large retail lender fit or don't fit? How does that kind of cultural background from the support and the level of independence that people have had at a different shop in the past influence how successful they'll be at UMortgage, which is normally a question I wouldn't ask a CFO, but since you were so intimately involved in the BD side of M&A and recruiting, I feel like this is something you've thought about.
Yeah, and I look at the P&Ls, so I know who succeeds. So I know the sort of archetype of who's going to succeed here. And you'd be surprised. It's not just someone who comes from the broker channel or just someone who comes from the retail channel. Oftentimes you find there's someone in retail who really doesn't belong in retail because, they're a go-getter. They don't really, need all the perks and spending or whatever leads to 500 basis points of margin, and they succeed more, over here. And then we have people in the broker channel who really had no business being there, right? Because, they get bogged down by the administrative tasks that, being a small business owner comes with. So, we're probably at the point where we're recruiting, 50% from retail, 50% from broker. I think we're the best of both worlds. And, we're not come one, come all, but only come if you think this is the place for you to succeed.
Yeah. When we talked about funding strategy and kind of the timing and the market characteristics that make mini-core an attractive place to be, that is that's helpful for me to understand why some brokers might be choosing to join a shop like UMortgage at this point in time in a cycle. And I think where the rubber meets the road on long-term success is when cycles change. Do they choose to stay, or are there funding strategies that attract? I don't know. It's markets ebb and flow. Have you guys thought about how the other side of this market, is there a strategy that retains and makes sure that the pieces that you've invested so much in bringing together stay together?
Absolutely. So we're a purchase focused company, and our LOs are purchase focused.
Until rates are 3.5% again, and then you can be a refi focused company, right?
So we're not just planning, the next couple of months, right? We're thinking for that future, right? We know what's happening in end of 2024, 2025, right? So how can we build an infrastructure where the LO can benefit and capitalize on the refinance market while still continuing to focus on their purchase origination business? And we've gone as far as pulling some key contributors out of our business to solely focus on building that future of UMortgage. And I think we'll be set up well to not just succeed in that market, but to prove our value and retain our LOs in that market.
All right, Gil, best of luck out in Utah with this location reopening or opening. Sounds like a great community that's coming together out there. Appreciate your time and transparency today. In some organizations, the CFO is so laser focused on a specific part of the business. It seems like you kind of have a broader reach with your executive team and Anthony at UMortgage. So really exciting getting to explore a lot of topics as it relates to the business through the finance lens.
Yeah, believe me, I have my days where I lock myself in my office and I dive into the numbers, but you can't lead behind a screen, and you got to get out there and really understand your customer. And my customer is a loan originator. So we try and get out as much as possible and spend time with our people.